talking about one of the things that has been a problem for me and other traders is when when they especially when they're doing swing trades is trying to figure out their timing. So we had a conversation with a couple of you guys about how to actually time your positions and what happens when you see analyst upgrades that call a price, and then next thing you know the price takes a turn for the worse, and so on and so forth. Right? Because we had this happen more than one time. This has happened more than one time on a couple of different stocks and such. Right? At the time, for me, this is my example. At the time I looked at Dollar Tree, right? Dollar Tree had a price of, let's see, this is where I bought Dollar Tree, 93.21. I bought calls because there's an analyst prediction that says, hey, Dollar Tree's going to 100. Analysts called it. They say it's overweighted, blah, blah, blah. I was like, all right, cool. I'm going to wait it out. It's 94. It's going to do this. But what happened is that you got a move from 93 all the way down to 84, right? You can do the math. That's less than 10%. That's maybe 5%, 3%, what have you. But the other thing about that report, and this is when you use an analyst report to do confirmation, especially around upgrades. In the report, they're going to talk about what the price target low are, and then what the high is. Always pay attention to the low and the high of those numbers, and then when you're looking at the mid, don't consider it at present based on what the price is. At the time I got the analyst report for Dollar Tree was at 93.21. I bought $94 calls, and it crushed me. You know what I'm saying? Just honest, it crushed me here. I held out here. I had a retracement, had some light, and then it just kept going down to its anticipated number of $86, $84, or $86, what have you. So in this situation, Dollar Tree hit its estimated low, which is around this area here, 84, 85, and then it also made its prediction around 100, which it did here, right? So if I had been patient and said, okay, at the time I looked at this like, damn, Dollar Tree, is kind of, is done or whatever. You know what I'm saying? I don't know if it's going to be a good move or not. And then where I fucked up and where a lot of us mess up is that we don't give it time to retrace to, a good buying value, a good buying opportunity. Because when we see come into a trade and we see this, we're like, oh shit, it's running. And just like me, I'm human. Everybody else, FOMO hits you. You be like, oh shit, I'm gonna miss out. On the next run up or the next run up.
How many of you did that with a firm? Be honest.
Yeah.
Honest.
Oh, I did. I got caught up in it, and y'all.
Right.
And violated my normal trade.
We all do. We all do it.
Right.
I guess I just want to go ahead, Shep.
Yeah. Thank you, Saul. I just wanted to make sure it's something we all do. So if you see a trade moving like this, you see trades that you read about or whatnot, and you look at the estimated low and the estimated price target. If at the time you purchase that price, I mean you're interested in that stock and you read that report, if the price is at the mid, because they always give you three areas. They give you mid, your low, and your high. If the price is at the mid, wait. Just wait. There are a lot of things
back off shelf. What I typically do with that, if I hear an analyst talking about something running, I go straight to the chart first, 4-hour time frame typically, and look at the market structure. Using the Saul example with the firm, I blindly got in the firm and then I looked at the chart.
Exactly. I did the same thing. But I did the same thing with Dollar Tree. I blindly looked at it and then I looked at the chart, right? But I didn't have enough data, and I didn't think about the flush out for the better pricing. And we got to remember in this game, man, like we're here to get better pricing, no matter what it is that we're engaged in, whether it's oil, whether it's lumber, whether it's chicken feed, or cat poop. You know what I'm saying? If cat poop costs you $2 and the going, an analyst comes out and say, hey, tomorrow cat poop gonna be worth $6.95. You best believe cat poop at $2 is gonna drop to 50 cents. So, it's kind of one of those things you got to be careful and make sure that the position that you in, if you're not in it prior to the announcement, that's one thing. But if you decide to jump into the position without effectively monitoring the existing price in comparison to whatever article you might have read, then and then not anticipating downturn or individuals wanting to get in position as well because they read the reports, right? Wait. Just give yourself time to allow that retracement to occur. Look at this. Is one. What percentage is that? From 93 down to 84. Like I said, that's not 10%, but it was a strong decline. And the other stock that did the exact same thing that we got caught up in, and that's FOMO, and it's nothing to anyone else, was Affirm. Affirm had a price target of 125, 130 at the time that we saw. That's at the time it came into was brought to us. When it was brought to us, what was it at? It was at 114, right? We saw it retrace down. A lot of us fought it and saw the retracement down all the way to 105. And then it had its move. And then it moved down again. So it's just kind of one of those things where now it's approaching that area for another load up, but then the 200-day is still moving higher. So by the time this comes into, when it's ripe and ready to go, it's going to have a lot of potential momentum, around it. You got holidays coming up and a lot of other things. So, because I just wanted to make that, add that, and just kind of put that out there real quick, just so everybody knows, what I'm saying, that, we're human. We make mistakes. There's nothing wrong with that.
I'm so glad you covered that because that's something that I have been working on a bunch lately, trying to fix in my trading. Like, just patience, man. Patience.
Yeah, patience, and that's one of my biggest issues
trade,
too.
Patience before you get into a trade. Patience when you get out of a trade. All that.
And see, Saul, I got a shirt and a saying that I teach when I do teach my classes. We get paid to wait, and even with me teaching that, I still have to make it a daily reminder to myself, I get paid to wait.
Yeah, because you get excited about a trade. You see a pattern or you see